Hello and welcome. I'm Stephen Lindwall. Welcome to episode 7 in the series on the infinite banking concept. Becoming your own banker isn't about access to money, it's about how you manage it. Nelson Nash was quoted saying, "Becoming your own banker requires discipline." Let me ask you a simple question. Who runs your banking system? Most people would say something like, "My bank." But think about that for a moment. Banks don't actually run your financial life, they run their business. They decide the lending rules, they set the interest rates, they determine the repayment terms, and when you need capital, you apply and hope they approve it. So let's reflect. Is your financial system working for you, or are you working for it? But one of the biggest mindset shifts in the infinite banking concept is realizing something. You can be running that system yourself. Now, that doesn't mean you completely stop using financial institutions. It means you begin managing your own capital system with the discipline of a banker. And that requires three things: repayment discipline, cash flow management, and self governance. Let's start with repayment. When you take a policy loan, the structure is very flexible. There's typically no fixed repayment schedule, like those periodic payments over a specific term, the way a commercial bank would require. But that flexibility is exactly where discipline becomes important. If you want to become your own banker, you should treat policy loans like real banking transactions. That means setting repayment terms that are equal to or even better than what a bank would require. Let me give you a real example. When I took the policy loan to purchase our Toyota 4Runner, I set up a repayment schedule. It's just like a traditional auto loan. I make monthly payments, and I structured it over a 4-year term that I can manage. Not because the insurance company required it, but because my personal banking system requires discipline. And this is where cash flow becomes very important. You should only take a loan that you can comfortably repay with your excess income, not a penny more. Stay cash flow positive. That's how you keep your system healthy. And here's something interesting. With most policies, you can typically borrow up to 90% of your cash value. But the real question isn't can you, it's should you. Good bankers don't lend to themselves recklessly. They lend based on cash flow and the repayment capacity. So just because the bank will lend you the money doesn't mean the banker version of you should approve the loan. And when you manage your personal banking system this way, the capital begins working with you instead of against you. Next comes cash flow. Most people earn income, pay expenses, and whatever gets saved or remember what's remaining there gets saved and invested somewhere else. But very few people actively manage how their cash flow flows through their financial system. Infinite banking introduces a different idea: cash flow recycling. Instead of capital leaving your system permanently, you move capital out and then intentionally move it back in. This creates velocity. Money flows through the system repeatedly, and each cycle strengthens the capital base. Think about how a real bank operates. Deposits come in, loans go out, repayments come back, and the process repeats. So your personal banking system can operate that same way. Most people have cash flow. They just don't always know where it flows to. So when you manage your personal bank intentionally, you begin directing that flow instead of wondering where it went. The final piece is mindset. Operating a personal banking system requires self-governance. You're not just holding a policy, you're operating a financial system. And systems require discipline. It means thinking differently about capital. It means planning major purchases strategically. It means respecting the process of repayment and reinvestment. In other words, you start thinking like a banker instead of a consumer. The goal isn't just to have a policy, the goal is to start thinking like the person who owns the bank. because the real power of infinite banking isn't the product itself. It's the behavior change that comes with it. Let me leave you with two questions to consider. First, if you truly became responsible for running your own banking system, how differently might you treat borrowing and repayment? And second, what would happen financially if more of your cash flow started circulating inside your own system instead of leaving it permanently? Just something to think about. Today, we talked about what it means to manage your own personal bank, and that includes repayment discipline, cash flow recycling, and self governance. Managing your personal bank is really about maintaining the launchpad. And this is where the philosophy becomes real. When you manage your system intentionally, the financial system starts working for you. But there's another powerful dimension of the system we haven't explored yet. In the next episode, we're going to look at how this strategy can also strengthen family wealth planning and generational capital. Because when you structure things properly, a personal banking system can extend far beyond just one lifetime. I'll see you in the next episode. Thank you.